Hey everybody, it is Chuck Barone on Friday, April the 26th, 2024, finishing a week of crazy with a crazy day, man. Wouldn't it be nice to have a quiet day in the markets? Just a day where I struggle to find something to talk about. That just never seems to happen anymore. There's so much crazy going on in this world and in these markets, guys. It's just beyond belief. But anyway, before I get started, let me welcome everybody to the show as always and thank you guys for your support. We appreciate everything you guys do for the channel. Watching the videos, hitting that like button, we appreciate that. Hitting on the live stream now. We got our regular Salty Attila already on. Good to see you guys. The comments and questions, everything you guys do every day for the channel keeps us rocking here. We appreciate you guys. All right, so let's talk about markets today. Let's wrap this week up with some crazy. So we knew we were going to get a big piece of data today. We actually have several pieces. We were going to get PCE number. We got it. Now let's say this. The number came in higher than they were expecting, which ordinarily would set off a tantrum, but it wasn't as high as maybe some people were thinking it was. I don't know how to explain it because the data was crap, but the market took crap as good news, and guess what? The market rallied today. It's bananas, guys. I can't believe it. So anyway, on bad inflation news, the market rallies today. The Dow up 153 points, 38,239. The NASDAQ jumps 316 points, sitting at 15,927. The S&P up 51 points, 5,090 on the S&P 500. So a broad-based market rally. Now, granted, there was some news in the markets. Some Google and some of the big mega caps had great earnings. Meta, Facebook, great earnings. Google, Alphabet, listen to this, guys, announced a $70 billion stock buyback. I mean, that's got to be some kind of record. Those stock buybacks, that used to be illegal. They didn't let people do that. They called it stock manipulation, price manipulation. Now companies can do $70 billion buybacks. Just goes to show you how much the world has changed. The bond market today, kind of a quiet day in the bond market. Bonds actually, the 10-year bond actually rallies up a little bit, falls 3 basis points, sitting at 4.67%. The 2-year, the one I've been watching, unchanged, sitting at 5% exactly. Now, I think that you're going to see yields on these bonds continue to climb. And it's a combination of things that's going to make that happen. The first thing is inflation scare. Whenever there's inflation, rates are going to go higher. The second thing is the U.S. government, and they're borrowing nonstop. I mean, it's just blowing this market out. And that pushes rates higher when there's way more supply than demand. Well, the auctions have been going okay, but there's so many of them and they're so big now. Well, anyway, we'll see where that goes. The dollar today rallies up. We expect it to, up 51 basis points on the index, back up over 106, 106.09 on the index. Good strong number for the dollar. Not a surprise. Rates are going to stay higher. Gold and silver today had a mixed day, with gold actually rallying in the face of this strong dollar. Gold up $5.80, sitting at $2,352.80 for an ounce of gold. Silver falls 20 cents, $27.18 for an ounce of silver. Still good, strong numbers for both. And I'm telling you guys, the rally is just getting started. Oil today rallies up a little bit, just up very small, up 11 cents. Still sitting at a price, in my mind, way too high, $83.68. We'll see if, once everything settles down in the Middle East, they can sustain this elevated price, because I really believe it should be backing up a little bit. And Bitcoin today falls $959, Now sitting, last I looked, 63,887 for Bitcoin. Still a very strong number, but not, wow, 70,000 plus. Okay, let's talk about PCE. We knew we were going to get this today, and the way it worked out, pretty simple. Core PCE comes in 2.8%. They were expecting 2.7. So it wasn't that big of a miss, but the bottom line is it's going the wrong way, guys. It's going the wrong way, okay? Now, what happened is after yesterday's GDP report and the inflation numbers that report brought, the PCE numbers that brought, it really spooked everybody. So even though we had a miss today, it could have been even worse, okay? So they felt like this was, even though it was not good news, they felt like it was good news, and the market obviously rallies up on it. Now, it could have been much worse, and I don't see how these numbers all make sense. But let's see if it gets revised higher like January and February did. That seems to be the play these days, right? Give us a number that's not going to freak the market out. And hey, Ed, how you doing? Not going to freak the market out. And then they quietly, a month or two later, revise those numbers higher. So we'll see. But this was not a good inflation number. This was not what the Fed wanted. This was not what the markets wanted. And this is I don't know how many nails you need to have in the rate cut coffin, but this was another final nail showing us that we're not going to get a rate cut very soon. Now, the Fed does meet next week. The Open Market Committee starts next Tuesday. We'll have Powell Day on Wednesday. It'll be very, very interesting to see what he has to say about inflation, the markets, especially. I'm going to be interested to see what he's got to say, if anything, about the federal government and the level of their borrowing. The way, Dennis, good question. Let me tell you, my opinion on these markets hardly ever changes. So what I would be looking at right now, dividend-paying stocks, preferreds, gold and silver, utilities. I played conservative and I like stocks. I'm not looking for the go-go, holy crap, I'm going to hit a home run NVIDIA stock. I like the ones that pay me dividends. That way I can continue to chip away at my cost basis. What I try to do, my mentor taught me how to do this, and he was really very clever. What he used to do is he would, try to chip away at his cost basis all the way down to zero. So let's say he bought 1,000 shares of a company, and as the stock goes up, he's selling shares to bring his cost basis down. And what he tries to do is end up with what he called a free, basically built on the gains position. And I used to look at his portfolio sheet and help him with it. And I couldn't believe how many of these over the course of years, okay, that he developed all these free positions. 100 shares here, 60 shares here, of all these stocks that were basically he owned with no money out of his own pocket, only the profit and the gains that, the dividends, the gains that these stocks had generated allowed him to sell until he had a position with no cost basis. Nice way to play the market if you can. You got to be very patient with it. You can't have too many positions, but very, very clever. Not in all cash, no. Got gold and silver, got to play that side for sure. Have held that for many, many, many years. Like I said, I'm a dividend stock guy. I like preferred stocks, especially. You see Citibank just came out with one now. Now, I'm not saying go hurry up and go buy this, but Citibank came out with a 10% preferred. Okay. So that's the kind of stuff I look at. I like to thank you, Attila, my man. I appreciate it. I like to look at stocks that are going to pay me money. I'm not looking for home runs. So many people play the market wrongly, but I tend to be a little more conservative, even though some people would say holding gold and silver is not exactly conservative. Nonetheless, I feel like my portfolio positions are all pretty conservative. All right, let's talk about some more stuff today besides this crappy inflation number. We got the University of Michigan consumer sentiment falling from 77.9 to 77.2. Consumers not liking the geopolitical, not liking higher for longer. The the surprise on this was consumers. Every month they ask them what they feel like the rate of inflation will be over the next year. Consumers now guessing inflation for the next 12 months will be around 3.2%. So they're not the market, the people they're interviewing are not seeing the Fed getting their target over the next 12 months or even coming close to it. I thought that was pretty interesting, and I guess that kind of explains why the sentiment was down. We got consumer spending numbers. Consumer spending just jumps up 0.8% month over month. Consumers continuing to spend money like crazy. I do like oil stocks, always have. These companies, they're just bulletproof now, right? I'm sorry, I'm veering off. I just saw Attila's question here. I want to answer that question because I appreciate the super chat. Oil stocks, one of my favorites. Now, you're going to get a little more volatility with those, but they're always going to win in the end. And what they're doing, the big oil companies, are just buying. They're not really drilling. They're not finding new deposits everywhere. Well, I guess they got a little of that going on. What they're mainly doing is just buying up the people finding the new deposits. So they're just buying up their competition. They're allowed to do that now. There's no antitrust anymore. And that keeps their earnings robust. Oil stocks are all typically very nice dividend payers. I would stick with the major leagues. If you have a little bit of speculative money, maybe you go for some of the smaller ones, but stick to the bigs. Check out their yields. Try to find the one that's best fits your portfolio there, Attila, and the one that works with the risk level you're willing to tolerate. All right, back to consumer spending. Consumers spending money like it's going out of style. No, I did not see the consumer debt number yet. And I'm sure when you see spending go up, I'm guessing you're going to see debt go up with it, right? Because that's kind of how people are spending these days. But that's a pretty big jump, almost 1% again on consumer spending. So consumers continuing to carry this economy. The savings rate down now in the United States down to 3.2%, which I got to say, that was a disappointing number to the people at the survey. But I was laughing because I didn't even believe Americans were saving 3% of their money. Now, the people watching this show, of course, we're a different group. I've been nagging at you guys for a long, long time to save a portion of all the income you get. But Americans at least saving a few pennies, $3 out of every 100. All right, let's talk about some of the crazy. Warren Buffett, he has a big real estate company. They settled their part of the lawsuit against real estate agents for $250 million today. Part of that real estate lawsuit where they're breaking up the whole way real estate gets done, claiming it's coercive, claiming it's artificially keeping commissions high, which is all a bunch of bullshit. But Warren Buffett his company had to fork over $250 million to settle that lawsuit. Credit card debt keeps climbing. This was not part of the consumer debt report. Hey, Donna. This was just Visa and MasterCard reporting. Now, generationally, it's crazy because different generations are carrying more and more debt. Gen X is the champs right now. The average credit card debt for a Gen X person, $8,134. For baby boomers, we're number 2 baby boomers, $6,245. Sadly, no generation, not one, had zero debt on credit cards. So credit card companies continue to make money. Consumers continue to use those credit cards. I'm telling you guys, though, take a look at your credit cards, get that statement out, see what you're paying an interest rate on that. If they're gouging the hell out of you guys, which I promise you they all are, try to find somebody that has a 0% or a starter rate where you can go and pay some of that debt down and not be dealing with those outrageous interest rates. The Treasury Monday, I guess, is going to offer details on this new repo plan. They're doing this repurchase plan. It's going to be fascinating to see exactly what they're going to be looking to. Nice. Zero credit card debt. Hard to do it. All right. There's 2 zero credit card debts. Good job. Monday, they're going to announce this repurchase program. Apparently, they're going to kind of try to aim it more for longer maturity bonds, 10 years and longer. We'll see, though, because they've been selling the shit out of 2 years. And if they're not going to include those in the repurchase program, that's going to disappoint a lot of 2-year holders that are underwater right now. So it'll be interesting. We'll talk about that when we get the details on Monday. Have you seen this one, guys? Trump and his allies. We've been talking about the election and the Federal Reserve. I've been kind of saying the Federal Reserve is going to be scared shitless of getting involved during the election. Trump and his allies are already putting forth a plan now to basically destroy the independence of the Federal Reserve. They want the president to have a say on rates and to be able to fire the chairman of the Federal Reserve at will, not waiting till the end of his term, just to blow them out, okay? Guys, I don't care who the president is. This is not about Trump. He's just the one proposing it. This is about any president that would try to do this, okay? Now we're going to have the Federal Reserve being political. It's not going to be about money anymore. It's not going to be about, policy. And we already know what the government has done to monetary or the fiscal policy. Now they want to control monetary policy too. Not a great idea. So we'll see as this goes on how this develops. And lastly, the last Fruit Loop crazy shit going on today. Have you heard of this new one? Fractional home ownership. Oh yeah. People are buying just a portion of a house now. So this woman, I was reading this article, the house is worth $12 million. She has, owns a small portion of this house, but she's got a payment like a regular house payment. She gets to have this house for 6 weeks in the year. And what do you do with the rest of the 46 weeks? Fractional home ownership. Okay, well, I guess it's nice if you can get a piece of the gains and you're not planning on ever going there or living there and you want to invest money that way. That might be something to consider. But to actually then go and reside in this house for a period, I guess it's like timeshare for houses now. What could go wrong? Anyway, guys, I'm babbling on way too long. That's it for the day. I appreciate you guys all being here on this chat today. Nice to see everybody. Donna, Chemo. There's Ed Sullivan, my man. Nice to see you back on. Dennis, of course. Of course, we got, all my favorites. Attila, Chemo, my man, the Salty Dog on here. Ghazi. We got the usual. Here's Elevate on there. Yay, Elevate. Nice to see you back today. And anyway, that's it for the week. Don't forget to hit the like button, guys. Please hit that like button. It changes the algorithm around, gets our video out in front of a few more people. End of a crazy week. Have a great weekend. I'm going to go now and have some food and watch the draft. The Bills get to pick first today. We don't have nobody in the first round. Oh, that's another complaint for another day. Anyway, guys, great weekend to everybody. We appreciate all you do for the show. We'll be back on Monday to bring you the news you need. Until then, everybody, have a great weekend. Thanks.